Hi, I'm Billy Keels, the host of the Going Long podcast. Every week, I'm going to be here interviewing the absolute best in the business as it relates to real asset investing, as well as real Main Street investors. We're going to be having conversations where you can listen in, and that's going to help you to continue on your path to education so that you feel much more comfortable as well as confident in investing long distance. So make sure that you go ahead and subscribe to the channel. Make sure that you're liking it as well, because that way you can get every single episode as soon as it comes out. And by the way, don't forget to leave today's episode a 5-star review. Let's go ahead and listen to today's conversation. Welcome to the Going Long podcast. We're back once again to continue to help to educate you so that you feel comfortable as well as confident investing beyond your backyard. I'm your host, Billy Keels. And you know what? If you have ever been interested in learning about a tool that can provide you with more investing options, both inside as well as outside of Wall Street, then guess what? You're going to want to listen to every single word of today's conversation, because today's guest is not only an expert that has over 15 years working in the self-directed IRA industry, he also spends time educating on tax advantage investment options through retirement plans. And he is the corporate vice president who's responsible for seeing overall day-to-day operations for NuView Trust company, which is a company that has over $1.4 billion worth of assets under custody. I want to welcome to today's show, Jason DeBono. Welcome to the show, Jason.
Hey, Billy. How you doing, man? Good to be here.
Hey, I'm really looking forward to it. Love the pre-conversation, and sure you're going to be adding massive value to everybody as we talk more about the self-directed IRAs. So as I mentioned to you in the beginning as well, Jason, I like to ask everybody kind of the same 5 questions. So we're going to start out with the very first question to help everybody understand where exactly you live in the United States.
We're in Disneyland country here in, I should say Disney World, to be more specific. I'm in sunny Orlando, Florida.
All right. We like sunny places, man. We like sunny places. So awesome. And you know what? I would love to know if you would share with us, what's the most positive thing that's happened to you in the last 24 hours?
Well, last night was in our household, we decorated our Christmas tree. I've got 2 kids, and for those with kids, understand that Christmas takes on a whole new meaning through the eyes of your kids. And so it was so cool and exciting to do.
Oh man, I love that. And we're due to get the Christmas tree up and going, and it is fun to watch them and get all excited and stuff like that. So thanks for sharing that with us. And listen, Jason, so I mentioned a couple things about you, some highlights, but I know that there's a lot more you can share with us. And so if you could just take a couple minutes and share with everybody here at the Going Long podcast, give us a little bit more about your backstory, please.
Yeah. Florida guy, born and raised, love to travel the world. So been fortunate to see a lot of cool places, but reside and make home Florida, and don't see that changing anytime soon. Married, got 2 kids, great kids, which is a whole nother set of excitement and a whole nother set of challenges in and of itself. But yeah, kind of accidentally got into the self-directed IRA industry a little over 15 years ago. And I always kind of tell the story as, I when people ask, how'd you get into this unique business? And it really was Dad said no. And so, looking back now, it's kind of a funny story, but at the time, when I asked my dad about this industry, and before I was interviewing, because I didn't quite know what it was, Dad said, no, you can't do that. You can't buy real estate in an IRA. And here we are. Obviously laughing about it, but there's certainly some truth to that. And a lot's changed over the last 15, 16 years, that's for sure.
Yeah. Awesome. So, and it's nice how, there's a lot of family that you're talking about, which is great with the kids, and then also learning things from your dad, and it sounded like you were being motivated also by some of the things that he was saying, and you figured out the way to actually do it. And you're actually now managing and running a business on day to day that is all around the self-directed IRA. So, let's see. I really would like for us to jump in and help people to understand, because I talked about it, being able to do things inside and outside of Wall Street. And but if you could just go to the most basic level, Jason, help us understand what exactly is a self-directed IRA. It may sound pretty obvious, but what is it, and kind of why what is it? And then we'll go into the rest.
Yeah, and I'll boil it down maybe a little more simplistic than I normally would. Just given that we've got a literally a worldwide audience. And so some people will know what an IRA is from the bat, and some people won't even know what that is. But an IRA is a United States based savings tool. It's tax advantage way to save for retirement. It's kind of like a 401k. They work somewhat interchangeably, but think of 401ks as being linked to an employer, whereas IRAs are not linked to an employer as a general rule. They're tied to individuals. So again, similar premise, but slightly different in their underpinnings. What a self-directed IRA is, it's really the Main Street version of an IRA or a 401k. Most retirement accounts, again, IRAs, 401ks, are Wall Street based. They're held by banks, brokerage firms. And so they're naturally kind of gravitated and forced into investing into stocks, bonds, and mutual funds. And while I think there's lots of positives there, for a lot of investors, it's just not where they want to be. And if you've looked at, for those of you that are here in the States or those abroad, we're in the middle of this significantly high growth in unemployment. We're in the middle of a pandemic. People are, businesses are shutting down. Companies are filing bankruptcy, yet the stock market just hit an all-time high. And there's that, while it's exciting for people, and I don't wish any negative on it, right? I mean, I have money in the market too, and we all benefit as it goes up. But I think we'd all agree, man, it's pretty disjointed from the reality of the world around it. And so for most investors, they're going, I got to put my money there, and I don't quite know what to do, where to go, why, the how. And so for many of those, self-directed IRA is a safe haven because it allows them to invest into hard assets, real assets like real estate. Stuff that I won't say is a better investment, nor will I say doesn't come with risk, but for a lot of people, it's a significantly easier investment to understand and an easier investment to make, to go out and buy and sell with a lot more confidence than what they can do in the stock market. So with all of that said, to put it in a kind of a nutshell, a self-directed IRA is just like any other IRA. It works the same way, but the investments housed in the account are Main Street based instead of Wall Street based.
Fantastic. And so that is a great explanation. And thanks for also making that a global, understandable definition, because you're right in terms of the retirement planning, and a great way to explain it. The 401k really employer based, and the IRA more individual based, and then being able to go there. So thank you for making that globally understandable for everyone. And I think you kind of touched on it a little bit, but maybe you could tell us about what are some of the different types of assets that you're able to hold in a self-directed IRA.
So there's really 4 asset classes that we kind of look at that our clients hold, and it's almost evenly split to some degree. About a quarter to a third is real estate, and this can be real property of any kind. So this is deeded real estate. It can be rental property. It can be raw land. We have clients that own burial plots. We have clients that own boat slips. Clients that own easement property that has billboards on it. I mean, it's real estate of some form or fashion. The second asset class would be private notes or private debt. So these would be individuals using their IRA to loan money out. A lot of the loans we see are real estate based. So it's a loan to somebody secured by real property. We see business loans. We see unsecured loans. We see mezzanine and bridge financing, construction financing. If you name it, we see it. And there's a variety of loans that are packaged up in there, but it's debt. So real estate is one, debt. The third one would be private equity. This would be entities. So these are things like real estate syndication deals. Even though technically the underlying assets are real estate, it's still packaged up that looks more like a stock than a piece of property. We see a lot of this in true private equity, which is investing in startup companies or non-public companies. So I guess Uber is probably a universal worldwide name that has more recently gone public. Prior to Uber being a public company, anyone that invested in the company because it was privately traded that wanted to use an IRA would need a self-directed custodian like a NuView to do something like that. So anything in the private equity world is kind of that third pillar. And then the fourth one is kind of the other bucket. This is a little bit smaller than the other three, but it's big, it's notable. This is where we'd have gold, silver, platinum, Bitcoin, cryptocurrencies, tax liens, tax certificates, and then all the even more unique or esoteric stuff. Got a client that has a racehorse. investment. So that we kind of take anything that doesn't fit into that real estate, private debt, or private equity, and we throw it over there in the other category.
Okay, fantastic. So real assets, debt, and private equity, and then the other. And then because I actually have a kind of a two-part question as it relates to other, and you mentioned gold and Bitcoin and things like that. Number one, are you seeing more and more of a tendency for people to use their self-directed IRAs for the other bucket right now because of things that are happening?
No, the answer is probably a slight uptick, but not enough to be terribly meaningful. And I think what it is I think it's because even though there's a lot more people buying things like Bitcoin and precious metals as a hedge, right, against potentially what may happen. What's very interesting is because everything's going up. I mean, it's a very unique time, right? The stock market's at record highs. Real estate is flying off the shelves. Everything. And again, it seems almost contrary to kind of what the world we're all living in, right, in this kind of pandemic environment. But I think what happens is if there is some economic uncertainty, if you see a little bit more of a bear market in the stock market, if you see rising inventory in the real estate market, I think those would then fuel a lot more of these kind of hedge-based investments like crypto and gold. But for now, while we're seeing more people doing it, we're also seeing more people buying real estate. So it's they're almost all boats are rising in a rising tide.
Okay. All right. That makes a lot of sense. And then the last part, or the second part of that question, was as it relates to the other bucket. So I'm going to bring us back there again. As you mentioned gold, are there certain types of gold? Like, is it the same collectibles that you can put in your self-directed IRA, or is it only a certain type? Just as we mentioned that, I think that's also too would be interesting to know.
Yeah, and it's actually really good for a point of clarity because precious metals is actually really a universal, worldwide investment. You can buy any kind of metals as long as you buy them for their intrinsic or weight value. You cannot buy numismatics of any kind. So the way that they kind of draw the guidelines is all the metals have to be 0.999% pure, 99995 for gold because it's a little bit more malleable. And they have to be issued by a NYMEX or COMEX or government issued refinery. And there's a listing of those. So for example, in one of the investments that we see is like golden eagles or silver eagles here in the States. We see the Canadian maple leaf. Excuse me.
Sure.
We see the Canadian maple leaf. Would be another example. I believe it's the Australian Philharmonic is another one. So as long as it meets the purity level, most governments have a dedicated coin that are usually in 1 ounce increments, and you can buy any of those so long as they meet that criteria.
Okay, awesome. So thank you very much for that clarification as well. And just want to take us back kind of to one of the things that your father told you in the beginning, like you can't do that. And so I'm always amazed, right? Even because as we start to talk to more and more people and helping people to really understand the different options and the different tools that they have at their disposal, that there's still such there's so little knowledge about self-directed IRAs just in general. But I would be interested in your take is, why do you think that is, number one? And I know that you're also on a crusade to bring this to light to more people. So maybe you could tell us about why you think it is the way that it is today, but then more importantly, what are you doing today to kind of help people understand more about this fantastic tool?
Well, I wish I knew the exact answer, but I think we're probably pretty close as to the cause. It's a few different things. I think first and foremost, and let me start by saying over the last 15 years I've been doing this, it's changed significantly. 15 years ago, my dad, for example, but if I stood up in front of a group and said, how many people know you can buy real estate in an IRA? 1 or 2 people would raise their hand out of 100. If I did that today, 20 or 30 people would raise their hand out of 100. So the information age is having impact even on our business as well. It has to do with, I think, 2 different things. First is it has to do with who created and really was the primary benefactor of retirement accounts from the get-go, and that was Wall Street. Once they got their hooks right into these retirement accounts and realized every time somebody gets a paycheck, a little more money ends up in Wall Street, a little more money ends up in Wall Street. It just became, it was like a toll. Once you get the toll, you're never going to not get the toll. So there was always incentive for them to keep the investors, I don't want to say uneducated, because I don't think they were making that attempt, but there was no incentive for them to say, oh, by the way, you can do something else. That was one issue. The second issue is that the process of holding assets outside the stock market's a little different, right? Doesn't work the same. It's more labor intensive. And so there's very few companies like NuView that provide that service. So you had a time 15, 20 years ago when there were 3 or 4 providers, right, that were offering this as a service. And the internet was really just taking off. And we kind of think of the internet as having been around forever. But it wasn't until 2008 that the iPhone changed the way that we get our information. So I think it just had to do with people not really knowing. They're creatures of habit. And then lastly, it's because it was easy. And unfortunately, and I think this is something you're probably a big advocate of, is easy isn't best. And you can make things easy. And we should all strive for that. But if you simply look for the easiest or the path of least resistance, you're going to end up at the status quo. And the status quo is kind of going back to Javier, right? The status quo is work for a company, make a lot of money, put it into your 401k, keep buying stocks and bonds, and retire well. And I think we all understand that's not the world. That's not what makes people successful. That's what makes people status quo.
Yeah, I really like that. So I appreciate that and hitting on that point of status quo. And I love that you keep coming back to this. It is a question of, this is another tool in the toolbox to be able to help someone achieve the life and live the lifestyle that they want to live. I know lots of people that love the corporate role, and they just don't know that this is another tool that they could use to gain more control over their financial life and things like that. So, you talked about some of the benefits as well. You talked about it being tax advantaged, and I want people to really get an idea of, okay, the self-directed IRA, you've helped us to understand that, but what are some of the other advantages typically that when people come to talk to you or want to understand more, that you can really help them understand, okay, well, this is another tool that I really need to become more educated on?
Well, it starts with taxes. And I know that seems like the easiest approach, but I don't think, people underestimate how much impact taxes have on long-term growth. I mean, we all understand it on an annual basis, right? I make $100,000, the IRS taxes me $25,000, it costs me $25,000. And then I can in turn say, okay, but for that $25,000, I've got roads to drive on, schools for my kids to go to, right? Mm-hmm. What they don't realize is that, man, if they got to keep 20, if they only had to pay 20 instead of 25, right? That $5,000 difference, if they invested that year after year after year after year, can have profound impact. So to illustrate, the reason IRAs are so powerful is if you take $1 and you double it every year for 20 years, and you do that as a taxpayer, 25% tax, right? $1 over 20 years, doubling every year, 25% coming out year over year, you're going to have around $75,000.
Not bad.
If you take the same dollar and you double it every year in a tax-free account or a tax-advantaged account, instead of $75,000, you're going to have over $1 million. So one of the things that I love to share with people is, a lot of times we're so investment focused, right? How much can I make? My return. And that's how people make money. Wealthy people focus first on how do I maximize how much of my return I keep, and then how do I maximize return? Because if you told me I could make 8% tax deferred or 10% taxable, I'd take the 8% all day long and I'd end up with more money. But the average investor jumps on 10% because 10 is bigger than 8. And we're all trained that return. So, it's a fundamental mind shift. So, yeah, I mean, are there other benefits? Sure. Control, the ability to invest in what you know and understand, hard assets, not being subject to kind of irregularities and disjoining of reality that the stock market has. Those are all benefits of self-direction. But if you want to know the single foremost benefit why every single person should be maxing out as much money in their retirement plan and investing it efficiently, it's the taxes, because that will make the world of difference in the long run.
Love that. So thinking about the long run, thinking about the tax benefits, and you are so key. And I just want to reiterate this for everyone that is watching us or listening to us. or both. It's not about how much money you make. It's about how much money you keep. And Jason, you just said that, but I really want to reiterate that because that happens so often when people are, I'm going to get the next promotion, I'm going to get the next raise, and you get the next raise, but it puts you in the next highest tax bracket. You don't have anything that will help you from a tax benefits perspective, right? And you're in a better role, but you're bringing home less money. So, so this is just another one of the tools that can help. And so we always like to look at both sides here, right? So, and I'm interested in, for someone that may perceive the self-directed IRA, and we're talking about all the positive things, like what are some of the things that they need to take into consideration that could potentially be, I don't know if drawback is the right word, but it may not be the right fit for someone in situation X.
Yeah, and there are drawbacks, right? I mean, there are things that make this unattractive to some people, just like there's things that make it more attractive. And I love that question because I think it's the lens we should look through every decision is, it's easy to get focused and hyper-focused on, oh, this all sounds great. And we tend to forget the drawbacks until they're in our face, right? That's lesson and experience colliding. But when we talk about drawbacks, the biggest drawback is actually the biggest benefit. And it just depends on what side of the equation you're on. And that is that you have to find your own investments. So when I talk to someone like you, Billy, and we had a great chat, kind of pre-meeting here, the idea of finding your own investments for you is like, oh my gosh, give me control, man. This is the best thing ever. You mean I can pick my own investments, which I do already, and not pay tax on them? Like, this is the easiest decision. But there's a lot of people that may be listening that love the idea, don't want to pay taxes. They want to be the guy or the girl that, turns $1 into $1 million, right? Instead of 75 grand, but they got to go find those investments. And there's risk, and you're going to make bad choices, and you're going to lose money. And you got to wake up with that feeling and pit in your stomach that I just lost 20, 10, 50, 100, $500,000. And you have to be okay with that, because that's something when I go back to the stock market, when you kind of asked earlier, Billy, about, why people don't know about this. They don't want to know. They like being in the market, because when the market goes down, everybody around them in their social circle is empathetic. Oh, the market's down 20%. We all lost money, right? They never have to face the reality alone. But when you make your own investments, you're on an island sometimes. You're looking around and everyone's like, I just made all this money. And you're like, oh, I made a bad choice and I lost 10 grand. So it's something, it's a mindset, and it's a fundamental shift that people that want to go make their own investments and use self-direction as a tool have to be willing to accept. And it's okay if you're not. If you're not, self-direction probably isn't a good tool for you.
Okay. And I really appreciate you sharing that. And it's the reality, right? Not everything is, bed of roses. There are some things that the tool, once again, has a specific function, and that may not be the right tool for a specific person at a specific time in their life. Right. And so I appreciate you giving both sides of the coin and helping to educate us, because ultimately at the end of the day, that's what you're here to do. Right. And so I would love for you to take us through as well. So let's imagine we're listening to you, Jason. You've kind of you've given us both sides of the coin. You've helped to educate us. You've given us a global definition of what a self-directed IRA is. And I'm really interested in finding out more. And I want to know, what is the process like with NuView and how you help me to get educated? If you could maybe take us through the process of what it's like working with your team or being educated by your team.
Yeah, I mean, the idea of self-direction first is a decision that you have to make, right? Is it the right tool for me at the right time? I think you articulated that very well. Once you've made that decision, then there's a couple different ways to structure things. And for the sake of time, we won't dig into that. But, we kind of look at it, and I think Chipotle may be a universal enough example, even for those on the other side of the pond. But the idea is very simple, right? You go in and it's kind of like, pick your base. Do you want a bowl? Do you want a burrito? Do you want a salad, right? Pick your protein, and then put the toppings on it, right? Whether we wrap it up, whether we put it on salad, or whether we put it on rice, at the end of the day, we're getting to the end. It's kind of like that with us. There's only a couple of steps, right? The first is pick your account. What's the right type of account for you? And it's different from person to person. And there's a lot of nuances, how you earn your money, right? How much money you earn. So that's decision one. Decision two is, how do you want to structure this, right? Do you want to be less involved, meaning, you have NuView do the predominant amount of the work, or do you want to take on some of those responsibilities? That depends on how much you value your time, right? It's like cutting your own grass. Do you want to do it, or do you want someone else to do it for you? And then the last part is you got to pick your investments. And that's the part that NuView doesn't help you with. So we can walk you through it. We can talk you through it. We can help you be educated on the process, right? But as far as whether you buy a property, whether you loan your money, whether you invest through a third party, all of those decisions are 100% made by the client in a self-directed account. Once you've made your investment decision, then it's just a matter of semantics, right? It's we're going to need some documentation from the group or investment that you're making. We need you to sign off and validate that, because remember, our job is here to simply take your instructions. So we need your clear instruction on what you want to do. And then we'll go buy it for you and we'll hold it. You can log in, look at your account and statement, and see the asset. If there's expenses that need to be paid, you'll direct us to pay them. If there's money that comes in, we'll collect it. But ultimately, the process of working with our team is really kind of going that step by step to understand what kind of account do I want, how do I want to structure it, and then ultimately what do I want to buy. And we want to educate you as much as we can along the way. But I want to be clear with everyone listening today. The role of a custodian like NuView or any of our competitors is it's to educate you to make a decision. It's not to validate or approve or endorse the decisions that you make. That's the self and self-direction.
Yeah, I really appreciate that, and making sure, because at the end of the day, you're here to help to execute once again on the specific tool that, as you mentioned, someone wants to self-direct. And so I appreciate you breaking that down for us. And I know you do some educational type of, not just podcasts, but you also are out actively helping other professionals, individuals. Maybe you could tell us another way that people could find out more about, and we'll come to this at the end as well, but just some of the different things that you do from an education perspective where people can find out.
Well, being in a COVID environment, certainly it's changed that landscape a little bit. But I'll talk in general terms, kind of non-COVID and then COVID. Typically, we are out at events. Our team is out at events, giving presentations at least every week or every other week at a minimum. A lot of the events that we host, we live stream as well. We used to do that even, kind of we always joke, we used Zoom before Zoom was cool, We used to stream a lot, and it's because we do have clients all over the world, and all over the US. So we've always kind of had a virtual approach. But we don't do as much right now, naturally, live presentations, even at our own office or stuff we host. But we typically have 1 to 3, events that we're constantly on. A lot of it is third party events. And so we post a lot of that right on our website. Anything that we can get the rights to or get the video from, we post and put that all on our blog. And then we host usually 2 to 4 times a year. We host a larger scale event, like a virtual summit, where we bring in 4 or 5 guest speakers, and it's a little bit of a longer event. But we do a variety of things. There's very few topics that you can't find covered on our website. And if you do have a topic that's not covered, let us know, and we'll do our best to get it covered. But there's plenty of content out there.
All right, fantastic. And we'll come back to that specifically here in just a few minutes as we get ready to wrap things up. And, I'm also with you, Jason. I was part of the Zoom crowd before Zoom was cool as well, just given the nature of what we do here going on. So, you know what? It is that time for us, or I guess me, to ask you a couple of questions, which are the going long final 3. And the thing is, Jason, I never ask the going long final 3 unless you tell me that you're ready for me to ask you. So are you ready?
I'm ready.
I think you were born ready, man. Here we go. So very first question is, we started over with you in the United States, and now I want to bring it back this way. And I would love to know, although I think I may already know, what is your favorite European location that you've either visited or is still on your bucket list to visit?
Well, I pandering a little bit to the host. I love Barcelona. It is an amazing city, but that is not where directionally I'm going to go here. I am going to go to a small island off the coast of Sicily, Malta, which is actually where both of my grandparents were born. So I've been there a few times, and not only is it just spectacular, because it is an island and it comes with all the fun and enjoyment that water brings to any city. But it's also near and dear to my heart, being that I still have a lot of family that's there, and it's the birthplace of my grandparents. So Malta it is for me, and it's also where I got engaged to my wife. So it has many reasons why it's special, and by far my favorite European city.
All right, fantastic. So Malta will take it. Absolutely, it can go ahead of Barcelona this time. So that's perfect. So the other question, the second of the going along final three, is one of the things that we've noticed, or that I've noticed, is that typically most very successful individuals that are leading organizations, teams, have tended to only made one mistake in their, well, okay, maybe more than one mistake in their career. And what I'd love to know for you to share with us, Jason, is if you can think of not necessarily the mistake that you made, but more importantly, what was the lesson that you learned that could help someone to be able to move forward and start to accomplish some of the tasks and goals that they want to?
Man, well, I can tell you I have a laundry list of mistakes that I've made. I'm going to answer it as two-part. The first one is you have to be willing to admit you made a mistake. This is something for me I still struggle with. I mean, good leaders or people that think they're great leaders, right? There's that level of ego and bravado that says like, oh, it's right, I'm right, do it. We got it. And it does. It's something I have to remind myself every day for two reasons. One is the humility for the people that see you as a leader is important, but two, sometimes people can end up clinging on to this idea. And they will let it bury them. And I use this all the time as a football analogy, right? I mean, how many times have you seen in a game where you're like, and football, American football, I should clarify, but when you watch a game and you're like, why are they still running the ball in the fourth quarter when it hasn't worked for the previous three? And, there's a point where you keep trying it because you're confident it works and it just hasn't worked yet. So but at some point you got to be willing to find that balance between I've tried it enough. I can't keep trying it because the opportunity cost of not shifting gears sooner may be bigger, right, in terms of harm than you actually think you're causing yourself. So it's two-part. One is realize, for the sake of you and others that you're not always going to get it right, and it's okay to make mistakes. And two, the sooner that you recognize that maybe it wasn't right, sometimes it's the mistake that actually causes you to get it right, because what you learned in the mistake, while it may have been painful, is you may have learned what did work, or you learned enough about what didn't work, and that Monday morning quarterback makes you a heck of a lot better the next go around.
Yeah, love that, man. That's fantastic. So thanks for sharing that with us as well. And it's time for the third of the Going Long final three, which is, what book would you recommend to the Going Long audience today?
So I'll start by saying, if you haven't read Rich Dad, Poor Dad, go read it. I'm sure that's been covered many times over. So I'm saying that, but it's not actually my book. The book that I recommend is The Richest Man in Babylon. It is, it's actually it's a fun story to read. It's a financial book, financial literacy, and it really is told through the Babylonians. So there's this like ancient historic kind of meaning and bit to it. But what I love about it is it tells you something that's very simple about money. It is no different today than it was in Babylonian times. And we tend to add complexity to money. We tend to think that today is different than it was 10, 20, 50, 100, 500, 1,000 years ago. And it's all the same. People that build wealth do it the same way today that they did thousands of years ago. And it's just a fantastic story. And it just reminds us all the importance of, being a good saver and a good steward of money. And unfortunately, too many people, you mentioned kind of that idea of getting a raise and you make more money and you go in a higher tax bracket. What compounds that is you make more money, but you really don't. And what compounds it even worse is because you technically make more money, you think your lifestyle has to increase, and you actually increase your expenditures. It's why there's a saying that no matter how much money you make, you'll never be wealthy. And it's because if your mindset is to spend what you make, you'll never build wealth, whether you make 40 grand or 400 grand. And this book, just reminds us and illustrates that. So if you haven't read it, go read it or get it on audiobook. It's fantastic.
All right, man. So The Richest Man in Babylon, that's a great one. And Wow, Jason, man, I'm just going back. I'm just thinking about the conversation. I'm thinking about you having the expertise in over 15 years and really taking things back. You're now leading an organization on day-to-day operations and making sure that things are moving forward. You're spending time and investing time with people like the Going Along audience and many others, and doing events and helping to educate and doing it in a way that really helps people to understand that there are more tools available that can provide them with more control over the way that they want to build out their financial life. And so you've told us some great stories, some of your own, talking about your dad and you getting the motivation and moving forward, to great examples of if you'd like to have 70,000 after on a dollar, or would you like over the same period to have a couple million or $1 million and some change. And so I'm just thinking to myself, man, there must be a lot of people. And I know there are a lot of people that are like, oh my gosh, I got to talk to Jason. I got to talk to someone from his team. I got to find out more about what NuView does. And so if you can help us to kind of take this home, help us understand what is the best way to find out more about you, Jason, and also more about what you're doing at NuView Trust Company.
Easiest thing to do, or for starters, I always recommend the website. You can go on there 24 hours a day. It's chock full of information. I'm a big believer in kind of self-education to start, right? Get yourself kind of an idea of what it is that you're looking for, and are you in the right place? At any point, if you're ready to talk to somebody, myself included, all of our contact info is on the website. You can email us, you can chat us, you can call us, whatever's most convenient for you, depending on where you reside, time zones, et cetera. But we're happy to chat with you. And just remember, our team here will do everything in our power to educate you up to the point to making a decision. But don't come here if you're not willing to make your own decisions, because that's the one thing that we won't and can't help you with.
All right. Fantastic. So listen, Jason, just for me, on behalf of the entire Going Along audience, I really want to thank you for investing your time, helping to educate us so that everyone feels much more comfortable and confident investing beyond their backyard. And I'm sure that lots of people are going to be reaching out to you and your team. So thank you very much.
Well, I look forward to it. Thanks, Billy, for having me. It was been a lot of fun today.
Okay, awesome. And so listen, with that, I'd like to also thank you as the Going Along audience for taking the time, investing the time with Jason and I here today. Listen, Jason left a lot of value here for you to pick up and really start taking action on and being able to learn more about self-directed IRAs. He's made his team available so that you can learn much more. And, because of that, I'm going to ask you to go out and share today's episode with at least 2 to 3 other people, right? Because you can be that person that helps to go out and positively influence your friends, your family, and you also help us to build a great like-minded community. So, and also let Jason and I know, what is it that you liked about today's conversation? What are some things that you'd like to know more about, right? And if you feel like leaving us a review, you can do that as well. We'll take 5 stars always. And you know what? I'm really, really looking forward to welcoming you back to the very next episode. Until then, go out and make it a great day. Wow, don't you love hearing from top-notch experts in the field? When I was getting started, I really wish that I would have had access to such experts. And even more, I wish they would have given me like a really simple list of things to follow so that I could have gotten to my goals much faster and been much happier even sooner. So that's why I've created for you the 7 things that you should avoid in order to be successful in long-distance investing. And you can pick that up really easily by going to billykeels.com/7 things to avoid. And also, if you liked today's episode, don't forget to leave a 5-star review. I'm looking forward to seeing you on our very next episode, so go out and make it a great day.